The tax year in the UK runs from the 6th of April to the 5th of April, and if you're watching this video, it is the start of a brand new tax year. I've seen a lot of articles on what to do at the end of the tax year, and I myself even have been tweeting quite a bit about this to use up allowances, but I didn't see very much on what to do at the start of the tax year, so this video is going to be what you should do now that the tax year has started. My name is Ryan, welcome back to a video here on Making Money Simple. There's loads of useful links in the description, including Stop Waiting, Start Investing, my ebook which will teach you how to start investing. Now that's a very quick intro out of the way, let's get into number one, and that is a review. Both reviewing the last tax year, so the last 12 months, and also reviewing the last quarter. I guess it would make more sense if the tax year started when the calendar year starts, but the fact that it starts at the start of April means that Q1 or a whole quarter has passed, so it's a good point in time through the year to take stock, review your finances, review your portfolio, your investments, your spending, your budget, everything personal finance related, and essentially see how you're doing. And if something's going badly or wrong, you then have 9 months to make it better. Being a quarter through the year and now the sun is starting to come out a little bit, you might want to start saving for holidays, set up a sinking fund, save for festivals, save for things going on in the summer. And it's much better to set up those sinking funds and those saving pots now than getting there and going into other savings or realizing you can't afford them. But not just reviewing Q1, so hopefully you can see that you're doing well, and if you're doing poorly, you can then correct it for Q2, 3 and 4 and the rest of 2022, but also reviewing the whole tax year. It's a very good time to look at your portfolio, see how much of your ISA allowance used up, for example, see the return that you've generated over the last 12 months. Setting goals and looking forward is obviously good, but it's almost a bit pointless if you don't look back to see what you've done, and then you can see things you've done well, things you've done poorly, and then correct them going forward for the next tax year. So I definitely recommend, number one, review both Q1 to try and correct it for the rest of the year, but also the last 12 months. I recently released a Vanguard Stocks and Shares ISA portfolio update where I essentially looked at the whole tax year from the 6th of April 2021 to the end of March 2022 to see how my portfolio had returned, and it was eye-opening. I could see how much I'd contributed, the return I generated, and so on. So I'd recommend doing that for the different accounts and investments you have, as well as looking at other things as well, such as your savings, your budget, and so on, all those great personal finance things that we talk about.
Baby, that's what I've been waiting for.
Number two, although I said it's important to look back, of course it is important to consider going forward, and this is to start contributing to your accounts for this year, and I'm mainly here talking about ISAs and pensions. So we get a number of tax-free allowances that we can use up each tax year. A lot of them do not carry over. So if you don't use them, you lose them. They're use or lose for a lot of tax allowances. Not all of them, but a lot of them are use or lose. So it's important to try and use up as much of the tax-free allowances as you can each tax year, because the more you can use, the less tax you pay, the more money in your pocket, and so on. Two ISA-related allowances that come to mind are the £20,000 ISA allowance for adults and the £9,000 junior ISA allowance for children if you have any children or grandchildren. These are allowances that we get each tax year and they don't carry over. Included in the £20,000 ISA allowance is also the £4,000 lifetime ISA allowance. So the ISA allowance, including the lifetime ISA allowance, and the junior ISA allowance do not carry over. So if you can get on the front foot and start contributing and making the most of those allowances straight away, that's a good thing to do.
Obvious.
And the other one is pensions. So with pensions, we get a £40,000 allowance. This is a bit different because you can use previous year's allowances up to 3 previous years. But once again, the same principle applies. It's important to start using up these allowances and then using up as much as you can over the next 12 months across the tax year. I think an important point to say here is that if you had been using a general investment account in the previous tax year, start looking into whether you can use a stocks and shares ISA or pension going forward for the next tax year. General investment accounts don't have any built-in tax advantages. You get taxed on the way in and taxed on the way out. Obviously there are some allowances which I will come on to shortly in point number 3, but broadly speaking, general investment accounts don't have any tax advantages or efficiencies, whereas ISAs and pensions do. With ISAs we ignore tax in the future, and with pensions we ignore tax today and can also get an employer match. So if you start using these two accounts and junior ISAs as well, rather than a general investment account, then you'll save on tax over the long term. Number 3 is then to also try and plan your allowance use for this year. So I know I've talked about a few allowances already, but what I'm talking about here specifically is the £12,000 300 capital gains tax allowance and the £2,000 dividend allowance. These are 2 more allowances that are use or lose, so if you don't use them in a tax year, you lose them and they don't carry forward. So when it comes to the £12,300 capital gains tax allowance, this is for stocks and shares and funds you hold outside of an ISA in a general account, and also things like second properties. And then when I'm talking about the £2,000 dividend allowance, I'm once again talking about dividends from stocks, shares, funds outside of an ISA or pension, as well as dividends you may pay yourself from a company or business. It's important to try and think how you will actually use these allowances going forward. For example, I took advantage of my £2,000 dividend allowance at the end of the last tax year, the 21-22 tax year, to take advantage of getting £2,000 worth of dividends and paying no income tax. And once again this year, at some point I will plan to take advantage of that £2,000 dividend allowance again, and the same thing applies to the capital gains tax allowance. Looking at capital gains a bit more, if you do hold, for example, a stock outside of an ISA or pension, rather than selling it all in one go, you can sell it across multiple years, for example, if you have a large amount, and then take use of the full £12,300 capital gains tax allowance. So what I mean here is, think about these allowances, particularly the CGT allowance and dividend allowance, and think how you're going to use these allowances, if you're able to, for this tax year. Rather than just getting to like the 4th of April 2022 and then not knowing what you're going to do, what you're going to buy, what you're going to sell, and panicking. Try and think about it now, so you're almost planning for the year ahead. And yeah, that pretty much wraps up these videos. They are the 3 things I would recommend you doing now at the start of the tax year. Number 1 is review. Number 2 is start contributing, particularly to ISAs and pensions if you hadn't been using them before, or if you had been using them before, you can start using those allowances again. And then 3, with those other allowances such as CGT and dividends, try to think how you're going to use those allowances going forward, because once again, if you don't use them, you lose them. Thank you very much for watching this video. There's a lot of useful links in the description if you want to look at my products or my other social media channels. I'm pretty much on every platform there is. I've also got a podcast and plenty of other YouTube videos up going through a lot of investing stuff, crypto stuff, and any questions, feel free to DM me on Instagram anytime. So thank you for watching and have a good day.